So the trade desk just dropped their latest earnings report, and at first glance, the numbers looked pretty solid. But when you actually dig into what they had to say, there's a way more interesting story going on here than just what's on a balance sheet. It's really a story about navigating some pretty serious economic headwinds and making a huge bet on objectivity and AI. So let's get into it. Okay, first things first, let's look at the big picture. The trade desk had an absolutely record year. We're talking a whopping $2.9 billion in revenue for 2025. And as you can see here, that's a massive 18% jump from the year before. I mean, that's some serious momentum. Now, if we zoom in on just the fourth quarter, it's a similar story. The company didn't just meet expectations, they beat them on revenue and hit their profit targets right on the money. So on the surface, right, it looks like a business that's just firing on all cylinders. But, and this is a big but, this is where the story really gets interesting. Yeah, despite all those great results, the trade desk turned around and gave a more conservative, kind of cautious forecast for the next quarter. So it begs the question, if everything's so great, why pump the brakes? What's really happening behind the scenes here? Well, it turns out that hiding underneath those really strong top-line numbers, there's a pretty significant challenge brewing. The company is facing some very specific, very targeted headwinds that are hitting a major slice of its business. Okay, so this right here really lays out the core of the problem. Get this, about a quarter of the trade desk's entire business comes from just two sectors: consumer packaged goods, CPG, think of all the big brands you see in the grocery store, and the auto industry. And here's the kicker. It turns out both of those areas are showing some sustained weakness right now. So why the weakness? Well, it's not really a trade desk issue. This is all about the bigger economy. You've got these huge global brands wrestling with inflation that just won't seem to quit. You've got regular consumers facing real challenges with the cost of living. And then there's all this uncertainty around stuff like tariffs. And what happens? Companies start to pull back on their ad budgets. But hey, it's not all doom and gloom. While CPG and auto are definitely struggling a bit, you can see here that other sectors, we're talking healthcare, tech, and finance, are actually growing like crazy. And that's super important, because it confirms that this is a very specific headwind, not some kind of systemic problem across their whole business. So, what's the trade desk's game plan to fight back? Well, their answer is basically a powerful 1-2 punch, and it cuts right to the heart of their entire business model. Part 1, doubling down on objectivity, and Part 2, a massive investment in artificial intelligence. So check out this quote that the trade desk CEO brought up. It's from a VP at Hershey's, and it just perfectly frames their whole strategy. See, for years, the ad game was all about cheap reach, just blasting your ad out to as many eyeballs as possible for the lowest cost. But the trade desk is saying, nope, that's the old way. Today, real growth comes from meaningfully engaging with people, and that's a whole different ballgame. And that different ballgame is what they call the open internet. Think about it. A walled garden like an Amazon or a Google, they sell their own ad space. So there's a natural conflict of interest, right? But the trade desk, they don't own any of the inventory. Their one and only job is to be a totally objective guide for their clients, finding the absolute best spot for an ad anywhere on the internet. And look, they've got the receipts to prove this works. The CEO shared this amazing case study about a big appliance maker that did a head-to-head test, the trade desk versus Amazon's own platform. The results were, just look at this, totally staggering. They reached 70% more households for 30% less money, and the campaign performed six times better. Wow, that right there is the power of objectivity.
Okay, so that's part 1 of the 1-2 punch, objectivity. Now, let's talk about the second part of their strategy, which is all about innovating for the future with the power of AI.
It feels like everyone is jumping on the AI bandwagon these days. But for the trade desk, this is old news. They've been deep in the AI game for a long, long time. Their core AI engine, which they call Koa, launched all the way back in 2018. So for them, AI isn't some new trend. It's literally part of their DNA. So what does their AI strategy actually look like? Well, you can think of it in 3 key pieces. It all starts with Koa. That's the AI brain of the whole operation. Building on that, they have Audience Unlimited, which is a new tool that uses AI to find the perfect audience in a massive sea of data. And finally, there's Deal Desk, which uses AI to help manage and even predict how well ad deals are going to perform.
Yeah, Koa really is the secret sauce here. It's not just one thing, it's this incredible engine that's always working in the background, predicting performance, optimizing ad bids, sniffing out fraud, and digging up these amazing insights from just mountains of data. Basically, it makes almost everything an advertiser does on their platform better.
All right, so let's tie this all together. You've got these headwinds pushing against them, but you also have this powerful two-part strategy of objectivity and AI pushing back. So what does it all mean for the future? Well, that brings us full circle, right back to that cautious outlook we started with. This chart really tells the story in a nutshell. They just posted a strong 14% growth in the last quarter, but they're guiding for a bit of a slowdown to 10% growth in the next one. And that is the caution we've been talking about. And now it all makes sense, right? The big takeaway here is that this conservative forecast isn't a red flag about the trade deck strategy or their tech. Not at all. It's just a direct reflection of those real-world economic pressures facing about a quarter of their client base. But even with that short-term caution, CEO Jeff Green ended the call with this really powerful statement of confidence. He's basically saying that in the long run, advertisers are always going to choose the objectivity and performance of the open internet, especially when it's supercharged with powerful AI. So at the end of the day, that leaves us with one massive question. The Trade Desk is positioning itself as the objective, AI-powered alternative to the walled gardens. But in a future that's going to be completely dominated by AI, is that bet on openness and trust actually going to be enough to win against those giants? Well, the next few years are certainly going to tell the story.